The Rebel Capitalist Show. I'd like to kind of get your view on the world today and what you find most interesting. Like, what have you been thinking about specifically over the last couple weeks?
Well, specifically longer term, I'm kind of watching certain dynamics. So one is energy. That's been a big theme of
Mm,
mine for a while now. Also watching the ongoing kind of digital transformation of financial systems, right? So how will things like Bitcoin or stable coins over time change the way our system's structured, as well as central bank digital currencies, right? So all these different directions that those can take over the coming years. So I think those are some of the bigger themes I'm watching. But a lot of it comes down to the whole inflation versus deflation, financial repression, fiscal policy, monetary policy, that sort of thing as well.
So, as far as the cryptocurrencies, let's focus on Bitcoin. I don't. I think the price isn't really the most interesting thing about the cryptocurrency itself. How do you see that reshaping finance? And then I think maybe a more important question is, how do you see that reshaping the real economy and allowing us to create more goods and services? How does that make us more productive in the real economy, or does it?
Well, I mean, so the short version is that the financial system is kind of working the same way that it has for decades, right? So it slowly upgrades over time, of course, right? Might have a mobile app, for example, to go with your bank. So they do adjust around the margins, but for the most part, the actual underlying pipes are unchanged for decades, and that has implications for the eurodollar market, the way international trade happens, as well as what people are able to store their money in. And so Bitcoin essentially represents another asset that is, basically self-custodied, that can it has enough fungibility and liquidity to be considered, essentially a currency or money. And so, in some sense, it's like a digital gold, but with other attributes as well. And so, it basically represents a new way to do international payments as a reserve asset. Of course, it's still smaller and volatile, so it's kind of on that path, and we're going to see how far it gets along that path. So that's one thing. And then two, with the introduction of Bitcoin, of course, people looked at the underlying technology and said, how can we repurpose this? So ever since at least 2014 or so, China began researching central bank digital currencies. So
Mm,
they basically,
right.
if anything, take some of the attributes of Bitcoin and then reverse all of those attributes while still having some of the kind of like the concepts in place. And so they've gone that route. And of course, in other markets, there are private stable coins that have done similar things, but of course with a different approach. And I think over time, we're probably going to see stable coins get more and more embedded in the financial system. I think that can replace some of their rails over time. Most people that do stable coins for say international payments, they kind of are in that space. They kind of say if you're not bearish on that, if you're not bullish enough on that space, go try to do an international wire transfer, right? It's like it kind of shows how sluggish the old system can be. Sometimes you don't even know which bank held up your transfer, and you're kind of both banks are blaming each other. Whereas stable coins, it's all is pretty much directly there. Now, it's not the same thing as Bitcoin. It's not as decentralized as Bitcoin, but it's basically a digital layer that makes everything go a lot faster. So I think longer term is that we're going to see less payment friction over time as more of these technologies develop, and less payment friction is good for the economy. We already see that in some ways, and within a specific country, you can have kind of these efficient payment systems, but we don't really have efficient international payments, and we don't have these kind of more permissionless types of payments.
Yeah, I agree. Again, I think it'll move the needle, but I don't know if it'll move the needle to a significant degree. I'm just thinking about the last time I did actually tried to execute what you're referring to as far as an international wire payment, and that's when I took dollars from the United States and brought them down to Colombia. So I had to execute the wire, let's say with Wells Fargo, and then it goes to an intermediary bank, and then it gets down to the what is basically a brokerage account at Alianza. Then I have to buy the and give them the green light. They have to buy the pesos with the dollars, and it's this deal that takes probably uh, 2 or 3 days, something like that. But if it were to take 2 or 3 seconds, it would be far better. That's for sure. But I don't know that I would take that, because let's say that money is used to buy an apartment. I've got to remodel the apartment and improve it. and create a service in the real economy, create shelter or for someone, it would shave a couple days off the whole process, but which is good. But I don't know that that helps me create more apartments or more living spaces, more shelters long term.
Well, I think it depends on where you live in the world. And so, for example, I think it's one of those things where it starts more at the bottom in that sense. And so, for example, remittance payments are a big area where I think it can change quite a bit because right now, sending a small international payment, you end up losing a big percent of it to fees. Whereas if you send a very large payment, you lose a smaller percentage. You might pay a more higher dollar amount, but you lose a small percentage. So I think one area is remittance payments, and two, for example, I know the Guardian ran a piece back in the summer talking about, say, Bitcoin in Nigeria. It has pretty high adoption there, and of course, they have more currency problems and various controls like that. And basically, there were, for example, protests occurring against police violence and other matters, and protesters would have their bank accounts frozen, so they would start to use Bitcoin and go around that problem. In addition, because of some of the capital controls, there were like merchants, small merchants that say buy some of the raw materials overseas, and they were blocked from doing that. And they said, well, wait a second, I can just use some of my Bitcoin to do that.
Right.
And so that's an example, and that can also potentially be done with certain stable coins and things like that. So there are a few different ways to do that, but I think that's going to become more meaningful over time, especially for some markets. And now we know that emerging markets actually represent the majority of global GDP and population, and kind of the marginal growth. And so that's kind of I think when we look in the global sense, is important to keep in mind. Whereas people that already have fairly reliable payment systems are maybe less impacted. I think
Mhm.
for people in developed markets, perhaps the biggest story is to see if any of these can become a more stable store of value, like Bitcoin, for example. Right
Right.
now, it's obviously still very volatile. Went up from zero to $1 trillion market capitalization. And then the question is, can it become 5 trillion? Can it become as big as gold? Can it, how large is the total addressable market of this? So one thing I would phrase is that essentially over the past, especially over the past 10 years, but really over the past, 40 years, basically for lack of good money, we've monetized other things. So rather than storing up money in say cash and bonds, we go out and we buy, extra real estate. We plow it into the S&P 500. We monetize all these other things, even fine art, for example, right? We'd rather pay, $200 million for a painting than hold cash, and take on all that risk of that particular asset, because the money's been so problematic with the yields below the inflation rate, below the money supply growth rate. And so in that environment, there's a tendency to speculate and monetize on other things. So if you were to get uh, you know more countries able to basically access something that is considered harder money, that can demonetize some of those other assets. So I think it's a trend to watch over
How
time.
would that differ from gold?
Well, the main difference between gold is that it's more mobile, right? So gold, that
I
goes
understand
back
that,
to.
but as far as the countries using it as a store of value.
Well, I think it depends how much they want. And so, for example, if you look back over the past few decades, there hasn't been until around the global financial crisis, there was this trend of them not really going into gold, going into sovereign bonds.
Mm,
And the
right.
problem is that's where we bring up, say, the long-term debt cycle, and we point out that that might have worked for 30, 40 years, but now with debt levels so high and interest rates below the inflation rate, uh,
Mm,
you know, they can lose money on their sovereign bond holdings if they want. Have fun with that, right? And it's not gonna it's gonna keep happening.
right.
Or you have countries like Russia that are buying gold. I mean, some emerging market central banks are still buying gold. I think Russia's about 20% of their reserves are gold, so it's mostly euro-denominated assets, and then they have a sizable gold allocation. Bitcoin is still too small and volatile for most central banks to really kind of put any serious capital in. Um, but if it were to get bigger, that's another option. In addition, one of the kind of unique things it has is that it's also a means of payment. And so you can see around the periphery, right? If North Korea or Iran, for example, want to be able to make international payments, they unfortunately have the kind of incentive to go to that first, right? It's kind of like how when beepers came out, they were heavily used by criminals, even though, of course, they had a legitimate use by doctors and lawyers and other kind of time-sensitive professions. But criminals also made use of them, and so you see, for
Mm,
example, that countries that are kind of cut off from the system find that secure, permissionless international payments are actually useful, and they can store up energy in that system so that they have kind of a stockpile of international payment potential if they need it. And so it's kind of like gold plus that international payment system. But right now, of course, because it's roughly a tenth of the size of gold and it's far more volatile, it's a different asset profile overall.
Yeah. And just for the listeners' clarification, probably the most confusing thing you've said in this whole interview, Lynn, is beepers. And those were pagers, for those of you who don't know. For those of you who are under the age of 30, we actually had these things that we wore on our belt. When someone would give you a phone call, it would page you. So you could go to the phone and then call that person right back with their phone number. So just a little flashback with technological history there. So how does Bitcoin get less volatile? What's the how do we go from A to B there?
I think there are a couple ways. One is that it has to have higher adoption, right? Even though there's statistics showing that maybe over 100 million people own it, for most of those people, it's a very small percentage of their net worth, and they treat it like a very risky asset because it has been a very volatile asset. And so, if it were to continue its adoption curve and be held by more people, that basically that any individual person or any individual kind of cohort of people have less ability to move it. In addition, as it reaches that higher adoption, maybe higher price level, higher market cap, the growth generally slows down at some point. We saw, for example, that over the past almost 13 years of Bitcoin's operation, it has gradually decelerated. So, for example, the peak in say 2013 compared to the peak in 2011 was like a 50-fold increase in
Mm,
price.
the
Then if you
balls
compare,
decreased, right?
yeah, and then you look at say the 2017 to 2013 peak, that was like a 20-fold increase. And
Mm,
so it's still, I mean, it's still tremendous, but it is decelerating from a very small base, kind of like how if you start from a micro cap stock and then you grow and you become a larger share of the market, you start running into the law of large numbers. So I still think the total addressable market is very large, but eventually as it gets closer to whatever that kind of percentage of global assets that it's maybe gonna find some stability around, uh, that becomes less speculative, attractive for speculators.
yeah.
So one of the contributors of volatility, in addition to the relatively low adoption, is the leveraged offshore exchanges, where when you think it's going to pump, they leverage it up fivefold, and then when it goes down, they get liquidated and they contribute to that volatility, both on the upside and the downside. And
Mhm.
so you'd expect over time for that to normalize a little bit as it becomes a less speculative asset. So volatility can kind of feed on itself to the upside, but then also it kind of dissipates to the downside over time.
Yeah, it is interesting how that demand may shift, or the main motivation for demand shifts from speculation to a more broad use case as volatility goes down.
Yeah, and we've even seen, for example, this year Bitcoin was, preferred by institutions. They have more regulatory clarity on it, in a sense that they know it's not a security; it's a commodity. It doesn't pass the Howey test, and in addition, it's the one that's truly decentralized. Whereas, retail in many ways flooded into the altcoin market because they're the ones that were starting from a smaller base and they're more speculative. Now,
Right.
there's a really poor track record of altcoins of getting to the next cycle with new highs, right? So Bitcoin is the one that's able to do that. Ethereum was able to do that from the last cycle. Most altcoins out of the thousands that exist don't really make it to the next cycle and kind of keep building on their prior speculative highs. So it's kind of a low probability bet playing off, but you see retail going into that. It's kind of like if you really want speculation, that's where it is. Whereas you see Bitcoin shifting more towards people that are dollar cost averaging into it, treating it as insurance that they hold outside of the system, kind of regardless of price, kind of price insensitive holders. And then you have institutions wanting to get in and have a small percentage of their capital in it. So we have seen kind of a differentiation in the market, and I think it needs more time and more adoption.